Welcome to LTT with Dominant FX, the first of its kind. Let's talk trading, and we'll be going just briefly into the trader stock and what is LTT all about. Let's talk trading is basically for experienced traders, newbies, those who have an abstract knowledge about the financial market, those who have interest in the financial market. So if you are a forex trader, if technically you are new into the forex market, you are probably learning about forex. Let's Talk Trading is actually for you, and it's actually a guide to learning about forex and also becoming a profitable trader. And in LTT, we'll be looking at technically we'll be looking at the introduction to forex trading. Yeah, very, very, very important introduction to forex trading, because we want to introduce you guys to what forex is actually. Those who are new into financial markets, so you must be properly introduced into the basics of forex trading. Then after that, after we've concluded the basics of forex trading, um, we'll talk about technical analysis. And when I mean technical analysis, we won't go deeper, but we'll just talk about the most easiest and simple strategy that you need, especially for those who will be into scalping, those who would become day traders. So this easy and simple strategy will be for you guys. And also we'll talk about your personal strategy. Probably you trade supply and demand, trade support and resistance, you trade the trends. So we'll talk about your strategy and your psychology, because um it's not about having strategies that actually are important. No, it's not about probably much about technical analysis, price action, all the chart patterns. How well is your psychology? Because your mindset, you can actually know all the strategy, but it's your mindset that will help you when it comes to your entries, when it comes to taking trades, that will help you, maintain and tame your emotions. And lastly, we'll talk about money and risk management, which is very vital. Once you've balanced your trading strategy and your psychology, the next thing you need to work on is your money and risk management. That's where your risk to reward ratio comes in every given trade. So in this episode, we'll be talking about introduction to forex trading. This is the day one of Let's Talk Trading, and it's the first edition. Honestly speaking, it's the first edition, and first of its kind. And I'm telling you guys that it's going to be an awesome, awesome, awesome edition. It's going to be an awesome, volume of talks, because I'll be doing this probably once in 2 3 months, and making sure that I have something prepared for you guys, because it actually pains me to see a lot of people, put money into forex, and the money just get blown up. So as I've been trading for about 3 years now, and I can tell you that the journey is not really easy. So get to be scammed by many mentors. People who claim to be mentors actually, based on influence and stuff, you get to be told a bunch of lies about the financial market, when they'll tell you put $20, and in the next 3 months you are already riding your Lamborghini. That's actually a huge lie. I was once informed. I thought when I started out as a trader 2021, in the next 6 months or probably 1 year, I'll be riding my BMW. But technically, I don't have a car right now. But I can tell you that over the years, I've been able to, study the markets, and I've learned a lot. And I can tell you that trading takes time. It takes time. Trading takes time, and it requires a lot of energy and a lot of patience and a lot of simplicity. If you can't keep trading simple, you can never be profitable. Note that if you can't keep trading simple, you can never be profitable. So, what is forex trading, guys? What is forex trading? Now, forex, as we all know, is basically foreign exchange. Probably the exchanging of one currency to another. Probably if I want to exchange my naira to dollar, maybe if I go to the United States and I'm having a bunch of naira notes, what do I have to do? I have to exchange my naira to dollar. So in that process, I've done forex, right? I've exchanged my currency my country's currency for another country's currency. So when I come to forex trading, what do I say? I would say forex trading is the exchange of one country's currency for another. It involves the exchange of one currency for another, in the sense that if I want to trade, I'll be trading between two currencies. For me to exchange for one thing to another, I should be giving out something to take something. So I'm exchanging something for another. So, but in forex trading, it is the exchange of one country's currency for another in a simultaneous way. How is that? It involves the buying and selling of currencies at the same time. While I'm giving out while I'm probably selling out my naira, I'm also buying dollar at the same time. That's how it is. That's why I said it involves the simultaneous buying and selling of a country's currency. So technically, if I want to trade, people would have said that forex is just basically, when I go to the bank, I have to stand at the counter and say, okay, I have some naira notes and I need some dollars. You have to fill some forms, and that no, that's not forex. Forex does not actually involve any third party in any bank. All you have to do is what? Have your devices in front of you, have your meta trading app, have your broker, and you are good to go. It's between you and the market. No third party involved. Forex is an OTC market. No third party involved. It's between you and the market. You are the one doing the exchange in based on the fluctuations that occur in the market. So forex trading is as simple as that. Just know that it is simultaneous buying and selling of currency. I have I have 200,000 naira and I need dollars. What do I do? I exchange. So that's forex. So now understand that the forex market offers constant wild range of opportunities. Honestly speaking, I've been in the market for 3 years, like I said earlier, and it offers a wide range of opportunities. There are a lot of opportunities you get in the financial market, and also it stands to be the world's largest existing market now for over decades now. The forex market has stand to be the world's largest existing market in the world, because over $5.5 trillion are being traded 24/5. By 24/5, I mean Monday to Fridays. That's that. And it's the good number of the forex market. Why a lot of people have been involved in it is because forex is kind of the major. I call it the major finance sector, because it's bigger than the stock market, it's bigger than the real estate, the indices market, it's bigger than any other financial market. And I call it the major because it's actually, when I say the godfather or the father or the mother of, it's technically the mother of every financial sector. Yeah, that's forex for you. So now we'll move into the terminologies of forex trading. Let me shift this a bit. We'll move into the terminologies of forex trading. Let's see. All right. Yeah, terminologies of forex trading. We have pips. Yeah, we have bearish, we have bullish, we have take profit. Probably those of you who have been in the financial markets will have heard this quite a number of times. You will have heard people say bearish, bullish. Oh, I'm going bullish, I'm going bearish. The market is bullish, it's bullish. The market is bearish. We have heard a lot of traders say that a bunch of times. You have heard about people say, "Oh, I hit my stop loss. Oh, it hit my take profits." You have heard about market execution. You have heard about limits and stop orders, and you have heard about what is it called, base and code currency, right? So that is that. We have heard about base and code currency. So now the terminologies in forex trading is simply the lag the is simply a specialized language or a bunch of abbreviations that are used by traders, actually technical traders in the forex market, in order to communicate and conduct trades with ease. I don't need to tell you that. If I want to use the word pips now, I don't need to tell you my trade went 250 points in percentage. You get what I mean, right? Yeah. So just it's just kind of a bunch of abbreviations that are used by technical traders, actually, to make trading easy and communicable. So now, what is pips? Like I said, pips is points in percentage. Whenever you hear the word pips, it simply means point in percentage. And this point in percentage is the smallest unit of measurement in change of price movement. Whenever you see the prices of a commodity or a currency moving, that's pips. It's the smallest and most ignored. It's the small, the little things, life actually, the little things about life are kind of mostly ignored. And why I will say that pips is very valuable is because it helps you in deciding your profit and loss. Irrespective to the lot size we are using. I didn't put lot size here, all right. Irrespective to the lot size we are using, it is the smallest unit of measurement and it's the most ignored. So, and this actually defines your profits or loss. It defines your take profit levels and your stop losses levels. So just know that pips is points in percentage, and it is the smallest unit of what measurement in change of what in change of price movements. Now, when we talk about bearish, actually, bearish is a negative outlook on the market, which indicates that the price of a market is kind of reducing, telling you that you have to go in for a sell, going for a sell, you have to know, going for a sell, going for a sell, going for a sell. So that's what bearish is all about. Then when we now come down to bullish, it's a positive outlook, positive outlook on the market that indicates the increase in market prices. Market is actually going up, indicating a buying movement. That means let's say Euro USD or gold is kind of bullish, is buying. When I say gold is bearish, it's selling. Then when I say the word take profit, it's simply means an order to close a trade. When I say I set my take profit at I set my take profit for euro dollar at 1.09, which means it's an order to close a trade when it reaches that price. That means if I buy or I sell, right? I If I decide to technically if I decide to buy, right? I decide to buy now, I decide to go bullish on a trade. Where I want the price to close in profit is my take profit. That is, I could actually put a specific price level indicating this is my take profit. And whether I'm online or not, I'm online or offline, the trade will actually close based on the fact that as long as my I was able to put my take profits. So it's an order to close a trade when it what reaches a certain price level to securing potential profits. Same thing goes to stop loss. This is an order to close a trade when it reaches a certain price level in order to what limit potential losses. In the sense that if I'm on a trade and the market begins to go sideways, not in my direction, in order for me not to lose too much money, in order for me not to lose too much money, I set my stop loss. I do what set my stop loss. This is where many traders miss out. You don't use stop loss. I what set my stop loss. There is even why they call it stop loss. To what stop your loss. Many traders don't use take profits. The reason why they made take profits available is for you to take your profits, whether you are online or offline. Take your profit because you are not a market mover, you are not a market decider. It's what take your profit or what stop your loss. So take note of all these. Take profits, stop loss, pips, very essential. If you are new to the forex market, these three things I just mentioned now are very little, but I can tell you that the reason many traders are not profitable in this industry. The reason why many traders are not what profitable in this industry. Now, when we hear the word all right, so talking about market execution. Now, this is simply the process of what executing the trade at what the current market price, in the sense that if I want to take a trade, I will execute the market, I will execute the trade by myself at the current price I am seeing on the chart. Let's say if the current price of Euro USD is actually at 1.065. That's when I open my device and I want to check the Euro USD, and I'm sure that it's going to buy. What do? I place a buy order, executing the trade immediately at 1.056 or 1.065. So that is that. When we come to limit and stop orders, limit and stop orders. Now, a limit order is an instruction to what buy or what or sell at a what specified limit price above sell or below what the buy of the current market, above or below what the buy of what the current market price, in the sense that if I want to take a trade, probably let's say I want to take a trade, um and I won't actually be active online, and price will kind of be, let's say, will be above above where I am. Price will be above where I am, and my entry is below the current price. What do I and I want to buy? What do I do? I set a what? A limit order, telling the instructing the market that instructing um once I execute that limit order, it's giving an instruction that once the market comes lower, comes lower to that price, once it comes lower to that price, when it comes to that price, what happens? It executes my buy order. So same thing goes for sell limits. And when it comes to stops, it's just a continuation movement. Let's say I want to buy Euro USD, but price is still lower. So what do I do? I set my stop order at a higher price. The moment the price reaches the higher price, it triggers my entry, and it what price keeps on going. That is that for limit and stop order. So coming down to base and quote currency. Wow. Now the base currency is simply the primary currency in a currency pair, while the quote currency is a secondary or counter currency. When I use the word base and quote currency, we have euro, we have USD. So euro, let's say we have euro USD now. Euro is our base currency, USD is our quote currency. So the base currency is the price that is bought or sold. Whenever I'm executing an order or taking a trade, right? Whenever I'm taking a trade, buy or sell, I'm doing that in respect to the word base currency. So the quote currency, from the word quote, you should understand that is the currency that is used in quoting the price. In the sense that if I have Euro USD, I'm literally saying I am buying Euro USD at the rate of dollar. Or let's say we have Euro USD, so I'm buying Euro USD at 1.605. So I'm technically saying that I'm buying Euro to dollar in the price of, or let's say I'm buying Euro in the price of, at the rate of 1.675 per dollar. I don't know if you get, it's not like saying I have the Euro USD. I'm trading Euro USD now. I'm on a trade on Euro USD. So what is it trying to tell me? It's trying to tell me that I am buying or selling Euro USD at the rate of dollar. If we have USD JPY, I am buying or selling USD at the rate of the Japanese yen. If it is pounds JPY, I am buying the Great Britain pounds at the rate of Japanese yen. So that's what the base and quote currency does for you. So now there are types of currencies. There are what types of currency pairs? Yeah, there are types of currency pairs. You don't just trade any currency. There are kinds of currency pairs, and this will actually help you to understand what you trade and why you trade. In the sense that we are trading currencies, right? Countries' currencies. So in order for us to understand the currency we are trading, we will need we need reports. We need to know the issues happening in the. We need to know about the economical states of those currency related countries. So now there are three types of currency pairs. We have the major currency pairs, you have the cross currency pairs, you have the exotic currency pairs. So currency pairs are two countries' currency that are what pair together. When we use the word currency pairs, from the word pairs, you know it has to come with two. So like I said, Euro USD is a currency pair. We trade in pairs, not like I have to hold Naira, then go to the bank. You know, we say now I have to go to the bank to get the US dollar. But no, we trade in pairs. All right, so that's why I said it's a one-on-one transaction. You don't need any third party between you and the market. So currency pairs are two countries' currency that are paired together for trading in the forex market. And there are three types of currency pairs: the major, the cross, and the word exotic. So that leaves us down to the characteristics of currency pairs. Now, what are the characteristics of currency pairs? If we have the base currency, I've already explained that in the terminologies of Forex. The base currency is the first currency in any given pair. The base currency is the first currency in any given pair, usually being bought or sold. The base currency is the first currency in any given pair that is what usually being bought or sold, and the quote currency is the second currency in any currency pair that is what usually being used to quote the prices. Like I said, I am buying or selling euro in the rate of dollar. If I come to GBP JPY, I am buying or selling Great Britain pounds in the rate of Japanese yen. If I come to AUD USD, the Australian dollar, I am buying the Aussie dollars in the rate of United States dollars. I hope you guys get that. So that is that for the characteristics of currency pairs. Now, coming down to major currency pairs. Coming down to major currency pairs. Major currency pairs are the most wildly traded pairs in Forex. The major currency pairs are the most wildly traded pairs in Forex, and they are mostly paired with the word United States dollars. One of the characteristics of the major currency pairs is that they are paired. Note, not all currencies that are paired with the USD are major pairs, but one of the characteristics of all major currency pairs is the fact that they are paired with the what United States dollars. Now, examples of Forex major pairs are the Euro USD, which is the Euro versus dollar, the Pounds USD, that is GBP USD, which is what the Great Britain pounds versus dollar, the AUD USD, which is known as the Australian dollar versus dollar, or we call it the Aussie dollar, Aussie Aussie dollar. NZD USD is the New Zealand dollar versus what dollar itself. USD JPY, United States dollar versus Japanese yen. We have the USD CHF, that's the United States dollar versus what the Swiss francs. We have the USD card, which is the what United States dollar versus what the Canadian dollar. So going back, these are all the major what currency pairs that we have, right? These are all the major currency pairs that we have. So coming down to cross currency pairs. Now, Forex cross currency pairs are pairs or pairs that are what paired with the what US in any way. Let me come again. The Forex cross currency pairs are pairs that are not paired or associated or affiliated with the what United States dollar in any way. These pairs are not connected to the USD in any way. And there are several examples of cross currency pairs, but I'll just brought out a few of them because these are the few currency pairs, the few cross pairs that I trade. We have the Euro cross pairs, we have the Japanese, there's the JPY cross pairs, we have the Canadian dollar cross pairs, the CAD cross pairs, we have the GBP cross pairs. So example of cross pairs is the EU JPY, Euro versus Japanese yen, is the EU GBP, Euro versus what pounds, is the Euro versus CHF, that's the Swiss francs, EU CHF, is the Euro versus Canadian dollar, which is EUR/CAD, and we have EUR/AUD, which is the what Euro versus what Australian dollar. Coming up, we have the CAD versus CHF, which is the Canadian dollar versus what the Swiss francs. We have the what is it called EUR/NZD, which is the Euro versus New Zealand dollar. We have the GBP JPY, my God, which is pounds versus Japanese yen. We have the AUD JPY, which is Australian versus Japanese yen. We have the NZD JPY. We have which is the New Zealand versus what Japanese yen. So all these are the are examples of what the cross currency pairs. Please take note of all this. These are examples of what the cross currency pairs. So coming down to the last type of pair that we have, which is known as the exotic, not exotic chibita, exotic itself. Now, exotic currency pairs. Now, exotic pairs are currency pairs that include one major country's currency and another country's currency from an emerging market. Not all countries' currency are enlisted in the financial market. You have to reach a particular level before you have been, standardized. Let me use that word, or a smaller word economy. So, not to talk too much. Examples of forex exotic pairs is the word the USD ZAR, which is this is my favorite, the USD ZAR. Like I said, not every currency that are paired with the USD are major. Please take note. Many traders fail to take note of this. Not every currency pairs that are USD are actually major pairs. So the USDs are actually the US dollar versus South African one. Why it's one of my favorite in the watch list is because I love the market structure of the United States dollar and South Africa one. If you are an experienced trader, I would advise you check the structure out. It's an awesome pair and it's volatile. We have the USD BRL, which is the US dollar versus Brazilian real. We have the USD MXN, which is the US dollar versus Mexican peso. We have the USD RUB, which is the US dollar versus Russian ruble. We have the USD TRY, which is the US dollar versus Turkish lira. We have the USD CNY, which is the US dollar versus Chinese yuan. We have the GBP NOK, which is the British pound versus Norwegian krone. We have the GBP SEK, which is the British pound versus Swedish krona. We have the GBP DKK, which is the British pound versus Danish krone. We have the EUR/AGF, which is the euro versus Hungarian forint. Please don't mind me. We have the EUR versus CZK, which is the euro versus CZ Corona. Please don't mind me if you are from that country. Don't mind my pronunciation. Apologies for that. So these are the types of exotic currency pairs that we are. Though these are not all of them, there are more. Even to the cross currency pairs, there are more. But for the major currency pairs, these are all the major currency pairs. All the major currency pairs. All the major currency pairs. But coming down to all the cross currency pairs, these are not all of them, but these are the few of their most relevant. Though coming down here, the only exotic pair I trade is the USD ZAR because I so much love the market structure. So that is that. So why is knowing the types of currency so important? Is because it helps you in fundamentals analysis. Yes, many people fail to take understanding the effects of knowing the group of the currency pair they trade. So the field is not relevant. But I tell you, when it comes to fundamental trading, when it comes to trading the news and predicting the influence or effect of high impact news, you have to know the currency involved. Sorry, the country's currency that is being involved. and that's where this aspect. So you have to know what to avoid and what not to avoid. And in terms of margin and in terms of spread, also, I didn't mention spread is a term, and this is the difference between the ask price and bid price. In current talk, we'll talk about all these aspects of terminology, but for this session, let us you know, scheme around the basis of forex trading. So, when it comes to your margin, your spread, analyzing the market in terms of fundamental buyers, you need to have this basic knowledge so that you'll be able to group in your fundamental analysis when it comes to trading the pairs. So that is that. So how to get started with Forex. Now that you know what Forex is all about, you've know the basic and few terminologies about the Forex market. You've learned about currency pairs, you've learned about the major, you've learned about the cross, you've learned about the exotic currency pairs. How can you get started with Forex? How can you start making money? Because I believe you've heard about Forex, right? You've heard about the financial markets. Good. How can you get started with Forex? One is what? Get knowledgeable about the forex market. Most ignored, very important, but most ignored. Get knowledgeable about the forex market. Get knowledgeable about the forex market. Two, register with a what? Let me come back to this aspect. Please get knowledgeable about the forex market. When you see, understanding is very relevant. You must have the know-how, the how, why, when of the market is very important because your money is being involved in this. It's an investment vehicle. Forex is an investment vehicle. It's an investment vehicle. So, and for you to move with the vehicle, you have to understand the direction of the vehicle, and that's where knowledge comes in. That's where knowledge comes in. What do you do to a cab to get you to your destination? You pay the driver, he drives you to your destination. But before he drives you to your destination, you have to know where you are going to. You don't just stop a cab and give him money and say, take me anywhere. No, you pay him and you tell him, I'm going to so and so place. So same thing goes to the market. It's an investment vehicle. You have to what? You have to be knowledgeable about the market, the environment, the systematic approach, the strategy involved, the terms involved, how the market operates. It's very, very important. If you must be a successful financial trader, you must be a successful forex investor, you have to have this knowledge. Be the basic knowledge, intermediate knowledge, or advanced knowledge. Make sure that you are knowledgeable before you put some money in forex trading. Don't fall for all these Twitter influencers or YouTubers. I'm not like that. Those of them in my community. I didn't even mention this. If you like the video, please subscribe to our YouTube channel. Subscribe to our YouTube channel. Make sure you click the like button. Don't forget, click the like button and remember to subscribe. And if you're not on our traders community on WhatsApp and you're on WhatsApp, click the link at the description. And also, if you want to join our traders community, where I drop my signals, my weekly analysis, want to see how I do my trading from 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 the top to the bottom. It's right there on the Telegram on the Telegram channel. You can just search for Dominion Traders Community or click the link at the description button. So make sure that you are knowledgeable about about the forex market. Make sure you are knowledgeable about the forex market. Then number two is what? Register with a reputable and what? Trusted forex broker. Very important, so you don't get scammed. There are a lot of scamming brokers everywhere. There are a lot of brokers that scam you when you take your money. So when I mean reputable, make sure that they have a track record, all right, have a track record, and they are what? Verified. They are what registered. Okay, so register with a what? Reputable and what? Trusted forex broker. I have a lot of forex. I have my personal trustee of brokers that I partner with personally. And if you are interested, check um, the description button for the link to register with my reputable to any of my reputable. I have two reputable and trusted broker. So if you want to be profitable, like I am, get registered with them. Then two, get a laptop or a smartphone with internet connection. If you must trade, you must have a smartphone. If you must be a successful trader, you must have a laptop to trade. You don't even need a laptop. You can also have just with your smartphone anywhere, anytime. You can make profit from the market anywhere, anytime, as long as you have your smartphone and there's internet connection. And most importantly, have capital. Yes, I do tell this to my traders in the community and to those under my mentorship. As long as you have capital to trade, there's always money to make. So if you have internet connection and there's no capital to trade, you'll be with a demo account, and demo account ain't withdrawable. So get knowledgeable, register with a broker, have a smartphone with internet connection. Then once you have that, enroll for a trading course. Enroll for a trading course. I'm saying this, guys. Enroll. Go for. Don't. A lot of people say you don't need a mentor, you don't need a coach. You can do it. It will save you from a lot. It will what save you from what a lot. I myself have a lot of trading coach. All right, a lot of trading coach. I have people I follow. I have people I learned from before I got to where I was. If you don't want to go too far, I am here. Dominion FX is here. I will coach you, but it comes with a price. It comes with a price. It's quite affordable though, but it comes with a price. So enroll for a trading course and get yourself a reputable trading coach. Sorry, get yourself a reputable trading coach. This is how you get started with the forex market. You learn, register with a broker, have your capital and internet connection, then get yourself a trading course. Learn. Well, but why I say get yourself a trading course, even though you have the knowledge about forex trading, you need to what keep on updating yourself. You need to what keep on updating yourself and have a mentor or a coach that can guide you. Someone you can ask questions, someone with vast knowledge about the forex market, someone who is knowledgeable. Get yourself a trading coach. So that's how you get started with forex. This that I have outlined is how I became profitable. These are the steps that I followed to get to the state I am. Okay, so that's why I'm dishing this out to you guys also. It takes time, but learn. It is learning before earning. All right, so that's that for getting started with forex. So what are the apps you will need for a successful trading journey? Hmm, this is awesome. What are the apps you will need for a successful trading journey? Number one is my FX book. You'll need these following apps: my FX book, investing.com, Forex Factory, TradingView, MetaTrader 5. You see these five apps, you will need them. Know that all of these applications are available for download on the Play Store and Apple Store. My FX book, investing.com, Forex Factory is a website. Okay, this right here is a website. This right here is what is a website. This right here is a website. So my FX book, investing.com, MetaTrader 5, and TradingView. These are the five applications you'll need to become a successful trader and to make your journey smooth and easy. So make sure you download these apps and you get yourself conversant with them, and they will help you. Also, how to trade forex. Yeah, how to trade forex. How to trade forex. Please, if you have any question, if you have any question, please make sure that you state them on the comment section. All right. Make sure that they are being stated on the comment section so that in the next video I can answer your question. So how do I trade forex? There are three ways you can trade forex: is candlestick strategy, two is technical analysis, three is fundamental analysis. These are the three ways you can trade forex trading. Like I said, this is the basic knowledge you need in the financial industry. One is what candlestick strategy, technical analysis, and fundamental analysis. So now, what is candlestick? What is the candlestick strategy? Now, the candlestick strategy are pictorial ways of representing data and information regarding the change of prices. Remember that we are dealing with the exchange of one currency to another, and when we come to exchanging currencies, it deals with the fluctuation of fluctuation of prices, right? It deals with the fluctuation of market prices. Prices, is appreciating, is depreciating, is increasing, is decreasing. So how do we now, if we want to put this in a graph, how do we now, be able to what gather information, or to know when to buy, sell, enter a trade, and not when to enter a trade. This is where the candlestick chart strategy comes in. So it's a pictorial way of what representing data and information that is what readable, understandable, and what approachable by what financial investors. So now, what are the what characteristics of the candlestick strategy? Number one is the bullish and bearish. There are two types of candlestick. There's a bullish candle and there's a bearish candle. Now, like I said in the previous talk, is that the bullish candle represents what a buying movement, price that is what appreciating. The bearish candle represents a what a bearish movement, price that is depreciating, meaning that it is selling, it is negative. All right. So now, what are now the characteristics of what the bullish candle is? The what the body, is the close, is the eye, is open and low. Now, what does this mean? This means that probably in respect to the time frame, in another trader talk, I will talk about time frame and how you can use that in your trading journey, because time frames are very relevant. Honestly, time frames are extremely relevant, but most ignored, especially by newbies. Newbies, you want to make money quickly. So now it means that at the start of the day or at the start of that particular time frame, the price opened at this level, moved up to this level, created a high, or probably sorry, price opened at this level right here. It came down, created a low. This now becomes a week, telling you that price actually came here. So it now it started going back up to this point, created the high, and at the end of that time frame, price now close. So based on this now, remember it's moving upward. So this is a bullish movement. So in respect to that, this now creates the open price, the lowest point, boom to the upside, the highest point, and it came down and closed at this level. So same thing goes for the bearish market. This is the opening price. Price push up, thinking that it was going to buy, but seller say no, we don't want the price to increase. So they now push it down. They push it down, and buyer say we no go gree, we no go gree, we no go gree, we no go gree, and boom, markets come close for this place. So this is this. So now this open and close area in between now create the body of the candlesticks. Now, why is it relevant is that if price is moving up, down, up, down, up, down, these candlesticks, in respect to the time frame, if I'm looking at the charts, normally we don't see lines, right? All these line charts, see line up and down, and there's nothing we can do with those lines. But when it comes to candlestick, it helps us to know the opening and closing price of this market. And this opening and closing price helps us to know where we can, execute our trades. And the body also tells us the volume, which indicates the strength. It tells us the volume, which indicates the strength of the market. So whether you see a very green or red candle, as we are seeing, it's telling you that this is the body, and this indicates the volume, and the volume indicates the strength of the market, and the strength indicates the direction. Hope you guys are getting that. So candlestick strategy is a pictorial way of what representing data and information regarding the change of prices. Regarding the change of prices. Regarding the change of prices. So note this: the body represents the volume represents the strength, and the strength what represent the direction of the market. So now, how to trade using candlestick strategy. How to trade using candlestick strategy. You don't just buy, you don't just sell like that. There are reasons why you have to, do what you do. All right. You don't just look at a trade and just buy. You don't just look at a trade and just sell. All right. There is what you need to know and what you need to do in order for you to what sell or buy. And the number one thing is that you must be able to what identify which candlestick is bearish or bullish. You must be able to what identify which candlestick is what bearish or bullish. That's the first major thing. That's why I did talk about the characteristics of what a candle, and in identifying the candlestick whether it's bullish or bearish is in respect to the time frame. So it's in respect to the kind of color, whether you're using a green for your bullish or red for your bearish. That's left for your decision as a financial trader. So the first thing you must do is what identify which candlestick is bearish or bullish. Then the next thing you must do is what identify the strength of the candle. I just said that the volume represent the strength and the strength represent the direction, because the strength of the candle tells you the direction of the market. Is it bullish long or bearish short? It tells you the strength of the market. Is it bullish long or bearish short? Then the third one is identify the highs and lows. Identify the highs and lows. Coming back to the candlestick strategy, you can see it. I did talk about the high, close, open, and low. It is very most ignored part of trading by newbies, but it's very relevant and effective. Extremely ignored, but very relevant. So you must identify the highs and lows, and this is in respect to the time frame you are using. Note that it is in respect to the time frame that you are using. So make sure you follow these 3 steps when it comes to identifying. So when it comes to trading candlestick patterns. So now, how to identify the strength of a long and short candlesticks? As you can see from here, how do I identify the strength? Remember, I said the volume is the strength and the strength is the direction. Now we have the bullish long and the short the bullish long and short candlestick. That long one indicates the volume. The reason why it's long is that there are very high volume of traders and buyers in the market. And the short one is saying that there are few traders in the market. So when you see a very long bullish candle, it's telling that you should buy. When you see a short one, it's telling you to sell. Coming down to the bearish part of it, the bearish long and short candlestick, the long bearish candle, which is very is telling you that that there are high volume of sellers in the market. High volume of sellers in the market. Then coming down to the short one, saying that they are less volume of traders, and probably they are still deciding whether to sell or not. All right. So now, one of the things to note about trading with candlesticks, you have to take note of this. When you're looking at the long and shorts and stuff of all those things, whether the bullish or green candle, one of the things you need to note as a financial trader when it comes to using the strength of any candlestick is one, the volume of the candle. Note is the volume of the candle. Is it long bullish or short bearish? The volume, remember I said the volume represents the strength and the strength represents the direction. And yeah, so it represents the volume represents the strength of the candle, and that strength indicates the direction of the market. So you will need it. You will need to know the long and short candlestick. You must be able to identify these things. All right, as traders, must be able to identify these things. You must be able to identify these things. Must be able to identify these things. The next is the weak highs and lows. I talked about this in the characteristics of candles. The highs and lows, very important. In any strategy you are using as a trader, any strategy you need these highs and lows. Then third is the word candlestick pattern. I won't talk much about candlestick patterns. I want to talk about this engulfed candle because it's the strongest. I named it the strongest pattern when it comes to my trading strategy. All right, it's the strongest. I use it in my mentorship. You guys have known me for that. I talk about the engulfed candle very much, very much. So now let's talk about the candlestick strategy, the best candlestick trading pattern. My God, now this is the engulfed candle, and sorry to say, let's move back to that part now. The engulfing candle is simply a candle that engulfs a previous candle, indicating a strong move. The engulfing candle is simply a candle that engulfs a previous candle, indicating a strong move. When I use the word engulf, I mean covers, envelopes it. I don't know if you guys get, and covers, envelopes it. When I use the word engulf, now is the word engulf. So it means to what? Envelope, when something covers, when something is above, higher than something, is engulfing it. All right. So there are two types of engulfed candle. There's a bullish engulfed candle, and there's what? The bearish engulfed candle. I hope you guys are following. There's a what? Bullish engulfed candle and the bearish engulfed candle. There are two types of candlestick. Bullish engulfed candle, I repeat, and what? Bearish engulfed candle. So you see this very long candle bar, very long one. It indicates high volume of trade, and it is what? Engulfing that bearish candle here. So it's trying to tell you that there's going to be a lot of buys, a lot of buys, a lot of buys, a lot of buys. So from the open to the close up there, it's enveloping, engulfing that candle. So that is trying to tell you that there's going to be a very strong move. It's going to be what? A very strong move, a very strong move in the market. So I tell you to what? Make sure that you are looking out for buys, looking out for buy, looking out for buys. That should be the only thing coming to you. As you can see in this particular area here, that green candle what? Engulfed the bearish candle. Come down to the, sorry, that's the bullish. Come down to the bearish area, it engulfs, it engulfs the green candle, as you can see from this particular area here, where we see how this red candle, though even though the green is in between the red candle, what you see engulfs it. As long as it closes below it, that's an engulfed candle. That is what an engulfed candle. Looking at it from this part also, so this is an example of an engulfed candle. So let's look at the characteristics of an engulfed candlesticks. And the characteristics of an engulfed candlestick, as there's the characteristics of a candlestick, every candlestick pattern has its characteristics. Yes, every candlestick, be it double tweezers, favorite soldiers, they all have the characteristics, but are mostly an engulfed trader. If I'm using engulfed, most of my trade is overs around engulfed candlestick. Yeah, so that because it's very effective and it's kind of the most powerful, the most powerful, the most powerful. So now let's look at the characteristics. We have the opening price and we have the what? Closing price. As you can see, the opening price, the closing price, and the what? Small body. The opening closing price, that's the characteristics. Take note of that. The opening, the closing price, and what? The small body. These three is what makes up, these three is what makes up the characteristics of what? An engulfed candlesticks. This is the what, this is what makes up the characteristics what of an engulfed candle. As you can see the closing price right there, we can see how its price started dipping from that closing area as it engulfed that green part. Price dipped down to that level. So these are the characteristics of an engulfed candle. Now what you should know about the engulfing candlestick. Now, note one of the things you need to know about the engulfing candlestick is that one is what? The bullish engulfing candle. Now, a bullish engulfing pattern or a bullish engulfing candle forms in a downtrend. You have to take note, it forms in a downtrend and it indicates a potential upside reversal. In the sense that you only see a bullish engulfing candle half when the trend is about to change from downtrend to uptrend. It's just like as the word say, bullish engulfing, bullish buy. We want to buy low, we want to sell high. So that is that for bullish engulfing candle. So like I said, a bullish engulfing candle pattern forms in a downtrend, indicating what? A potential upside reversal. So yeah, upside reversal. A potential upside reversal. Now, coming down to the bearish engulfing candle, a bearish engulfing candle or patterns forms in an uptrend, indicating a potential downside reversal. When price is coming down, you want to see your engulf candle at the low. right? When you see an engulfed candle and the low, that's for bullish engulfing candle. Sorry, when you see price coming going up, what is called a bearish engulfed candle at the top for a sell, you sell high, you buy low. Then now, the larger the engulfing candle for number three, the larger the engulfing candle, the more significant the reversal potential. The larger the engulfing candle, the more significant the reversal potential. The larger the engulfing candle, the more significant the reversal potential. Then number four, engulfing patterns can generate false signals. That's one thing you have to know. Engulfing patterns can generate false signals. They generate false signals. So it is essential to use proper risk management and confirmation techniques. It is better for you to use what? Essential risk management and what? Confirmation techniques. You don't just buy, you don't just sell, you don't just trade anyhow because you see an engulfed candle, and this is in respect to the time frame that you are using. So you have to be what? Strategic about it. Then number five is use the engulfing candle as a signal to enter or exit a trade, but also set appropriate stop loss and take profit level. Make sure you use the engulfing candle as a signal to enter or exit a trade. But while doing that, make sure you set appropriate loss and take profit levels. Newbies, you guys don't like putting stop loss. You don't like putting take profits. I've been there before, so I know how it was. I've been in this game for 3 years, so I know how it's like trading for the first time. No stop loss, no take profits. So by using the engulfing candle, no matter the fact, no matter the ideology of the fact that it's a very powerful tool, right? Make sure your stop loss and take profits are there. Then now, one of the things you need to note is that the engulfing candlestick pattern is a powerful tool. Is what? A powerful tool, but it should be in what? It should be used in conjunction with other forms of analysis. It's a very powerful tool. The engulfing candlestick pattern is a very powerful tool. A very, 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 very powerful tool. And it should be what? Used in what? Conjunction with other forms of analysis to what? Maximize what? Effectiveness. Maximize what? Effectiveness. So now, technical analysis. Technical analysis. We've talked about candlestick charts. Now, come down to technical analysis. Now, technical analysis is a method of what? Evaluating market prices by analyzing by what sorry, I need to go back. By what? Analyzing statistical patterns and trends in their price movements and other market related data such as what? Trading volumes and open interest. So technical analysis is a method of what? Evaluating market prices. That is simply by using what? The past events in the market, the present event in the market. You gather statistical data, observe the pattern of movement, know the trends in price, and once you gather that what this information, you use it in respect of the forms and tools available. You use that in what? Predicting the next move of the market. So that's that. But is very simple. Then we'll be going into details in technical analysis in the next session of the what? Let's talk trading day 2. We'll be going deeply into the technical analysis parts. So what are the forms of technical analysis? So specifically for what? Chart patterns. There will be what? A video specifically for chart patterns. So um that is that for forms of technical analysis. We have We have the candlestick patterns. I won't go into that. Then trends. Yeah, this is what we're going to talk about. There's a topic specifically for trend. Yeah, trend. So we'll talk about trends and support and resistance. So these are the two things we talk about. Easy and simple technical analysis strategy that you need, especially as a beginner, is what the trend, how to identify the trend, how to trade with the trend, how to identify the support and resistance level. They are known as pivots. Yeah, these are forms of technical analysis. Then apart from that, there's what they call the supply and demand. I won't talk about that now. And why we really need to do a video for that, because of basically supply and demand is in my mentorship. Supply and demand is in my mentorship. Supply and demand is in my mentorship. So probably let's see, I'm going to do a quick video for that. Probably in one of the two, maybe probably in any of the trader talk. So in any of the less talk trading per se, there'll be a supply and demand strategy. Then lastly is what technical trading indicators. Technical trading indicators. Technical trading indicators. Technical trading indicators. So that is that. So what are technical trading indicators? You get to know that in the later parts of this let's talk trading. So lastly, for this first edition is fundamental analysis before we get to the charts. Fundamental analysis is a method of evaluating the intrinsic value of a security. By why I use the word security, because of fundamentals is widely used in all the forms of forex, or in all the various sectors of the financial industry, be it foreign exchange, be it the stock, be it the real estate. You need fundamental analysis. So we have the securities such as the stock, bond, currency, indices, real estate. And the fundamental analysis is used to examine the underlying economic and financial factors, in the sense that you have to check the company stocks, the past, present, how it's, when it comes to stock, how it's doing. This is what you use to what predict the next move. Same thing goes with currency, your approach. You just what go there and what download the application. They are what available on the App Store or Play Store. Your duty is to what is to your duty what is to download. All right. I'll be creating a course. Probably maybe one of these days I'll do a video on how I use this most importantly Forex Factory for my fundamental analysis. Yeah, I'll talk about Forex Factory. I will already give you a scope on Forex Factory, how I use it for my fundamentals. So that is that. Let's get to let's get to our charts. Right, let's get to our charts. I'll need to click. I'll need to clear up some space for you guys. This right says also one engulfed candle.
There is there is no. So how do I spot my entries around here now? If let's say why this is very effective. Now look at this long bearish move, right? This is an engulfed candle. It's a quite a long engulfed candle. Well, let's this is an engulfed candle right here. As you can see, an engulfed candle. This is an engulfed candle all the way down right here. An engulfed. You can see the selling opportunity, right? You can decide to, take a trade. So now let's leave that. Now this is a bearish engulfed candle, by the way. This is another bearish engulfed candle, by the way. A bearish engulfed candle. Sorry guys, this is a bearish engulfed candle, by the way. Yeah, a bullish engulfed candle right here. Fully engulfed. So now, how do I take my trades? I just, basically, if I decide to take a long my trade, well, this is where the price close, right? I can take my trade here. Probably this is a very good eye. I can target this place right here as my take profits. Those who have experience with trading do not analyze the markets, and my stop loss will be below this right here, below the wick of the engulfed candle. Boom. Good risk reward ratio. Another engulfed candle spotted. I target the what next eye. I target the what next eye. I just take my trade, and I just decide to what my stop loss below the wick. Yeah, and I target probably this is a very good as you guys can see. Sorry to say, as you guys can see from here. Don't mind the chart movement though. Yeah. So I can just target the nearest eye. Keep on doing that, very effective. Up probably since I've targeted this eye before and there's another up candle, I target the next eye. I can decide to probably swing my trade. Those of you who can swing trade, you can decide to put your TP around there. And what happened? You price probably retrace and spotted another engulfed candle. What do? You what enter in, boom, you still target your same eye level and you put your stop loss right here. Very nice setup. And how do you find another entry? You spot another engulfed candle. I don't use a bad replay, but I would have done a bad replay for you guys. But probably in another video, probably will use bad replay. So this is that you work is a stop loss below the wick. Make sure below the wick. After the close of this engulfed candle, you enter and what you target the nearest eye. This is the nearest eye right here. Right, boom. Target that eye. So this is how we trade the engulfed candle. Very this is over. This is quite a great no huge risk reward ratio. If I decide to use this setup right here, probably take this back a bit, and I said all right, since this is I have to find my entry around there. So liquidity, right? I can decide if I want to take this bearish move right here to this bullish engulfed candle. I can decide to buy at the engulfed moved and take my trader at this high here, and I'm done, bro. Like guys, I'm done. This is a very good strategy. So very easy, very easy. If I decide to take a sell, if I decide to take a sell, boom, from this part, I can put my stop loss here. And since this is very kind of quite high, I can do a 50-50. Just make sure I'm risking the same amount, or risk times two of the amount. If I do times two, if it is very long, make sure you are doing 50-50. So this is 50-50. Do 50-50 because price will always move in. Once price is move higher than, once no price, this volume is actually very high. So what we price, the price will have to what, move times two of that. So you have to what, target 50. No, target the 50. That is, I'm sorry, I mean, if you are risking one, yeah, so you risk 1:1. That's what I mean by that. 50-50, 1:1. That means if this is 50 pips stop loss, your take profit should what, not more than 50 pips on this trade. That is that. So as you can see, engulfed candle, guys, this is an engulfed candle right here. An engulfed candle. Very sweet strategy on Euro USD that you need an engulfed candle. This too is also a very long one, right? So I target 50-50. Let's try the 50-50. Let's see if it's gonna work. My stop loss will be above here. So 50-50. Let's do 50-50 on this. Right. This is 50-50. It's 50-50. So 1:1. So that is all for the video, guys. So remember to like, subscribe, and share this video online. The engulfed candle strategy is a very easy strategy, and it works accurately on Euro USD. It has been tested over the years. I've tested it. That's the reason why I'm able to teach the strategy, because, and those of you who are in my mentorship, you've noticed my technical analysis, my smart money trading, advanced level of trading hovers around engulfed candles. Yes, you've seen me talk about engulfed candles, not my strategies. It's now I believe I can say it's the most powerful strategy. It's the most powerful strategy. I can say it's what is the most powerful strategy. So, guys, that is all for Let's Talk Trading. That's all for Next Talk Trading. This is all, guys. And I believe you guys enjoyed the video. Remember to like, share, and subscribe. In the next class, we'll be talking about easy and simple technical analysis. In the next video, we'll be talking about easy and simple technical analysis. If you don't want to miss this further talk, see you guys in the next video.